Hey everyone, welcome to episode 17 in my monthly series where I review my high yield dividend stock picks of the month from a year ago. So on my YouTube channel, as most of you know, I have a monthly series called Top 3 Dividend Stock Picks of the Month designed for high income, which I've been doing over 2 years now. So in that video series, I give you my opinion on which 3 high yield funds are a great buy of that month or are undervalued in that month. So in this video, I will go back and review these stock picks 1 year later. Doing this holds me accountable for my stock picks, also proves that I am a complete honest and open book and I have nothing to hide from any of you. And I know many of you appreciate this honesty. I'm not perfect. I'm always, I could make mistake, and I'm always learning and evolving my income oriented strategy going forward. So let's review these stock picks from a year ago, from August 2021. I will not only check out the share price, but also the status of the dividend or the distribution, which is far more important for us buy and hold income oriented investors. So was I right? Was I wrong? How are those picks doing right now? Let's find out together right now. All right, the US stock pick for August 2021 was RYLD, one of my favorite funds or ETFs on the US stock market. We're talking about the Russell 2000 covered call ETF from Global X. So RYLD, as we know, is a high income ETF that basically tracks the Russell 2000 index, a lesser known index in the United States, which tracks 2,000 of the smaller to medium sized companies in the US. And it uses a covered call strategy, of course, just like the name says, an at the money covered call strategy, which essentially means you're getting a lot of income, but you're basically forfeiting all the potential upside if the Russell 2000 goes up in value. So at the time of the pick, it was 25.07, a little bit lower than the all-time high or the 1 year high of 25.71. So your yield is just under 12%. And this is what I'm talking about here. So as you could see, where the Russell 2000 index is here, is basically the 2,000 of the smaller to medium sized companies. So let's say you take the biggest 3,000 companies. S&P 500 is the biggest 500. Well, you have other indexes as well, like the Russell 1000, which is the 1,000 biggest companies. So you could think of it like the S&P 1000 if you want. 3,000 is the 3,000 biggest. So the Russell 2000 goes right here in this spot. So yes, they are smaller to medium sized companies, but as you could see, some of them are in the billions. So they're actually not that small, if you ask me. So why was RYLD a pick of the month? Well, it's one of my favorite funds, and it complements QYLD very nicely. It's QYLD's younger brother. It works the same exact way, except instead of the NASDAQ 100, it's the Russell 2000 index. And it's a great way to get diversification on those smaller to medium-sized companies, because usually, everyone just goes for the big blue chips. Well, there's still a lot of good growth potential and income potential from the smaller companies. And this is a safe way to do it because you're getting 2,000 in one. It does have, the Russell 2000 index does have a bit of higher volatility than, let's say, the S&P 500, and higher volatility equals higher distributions, higher covered call premiums. As you could see from the the schedule here, you could actually see the dividends, and they're fairly consistent between 20 and 25 cents or 24 cents a month. So very high income. Of course, these are Global X, QYLD, RYLD, XYLD, and even their new one, which is DJIA, I believe. They do at the money call options, right? So you're basically giving up all the upside, which means the share price of QYLD, RYLD, XYLD will not be impressive at all. What is impressive is the income. So of course, this is great for Canadian RSP accounts because there's no 15% withholding tax. That's only in the RSP. My pick number 2, my Canadian pick, is FAP or FAP, the Aberdeen Asia Pacific Income Fund. So this one I had sold off a while ago. This fund is a closed-end fund that holds basically corporate and government bonds in the Asia Pacific region. So, it's a pick that I added in my portfolio. I sold it, but one of the main reasons is really for that diversification. Not only is it in the area that's hard to reach, Asia Pacific, but it's also fixed income. And it's leveraged as well. That's why the yield was fairly interesting. So as you could see, the July 28 stock price a year ago, $3.17. You would get a yield of about 8.52%. This fund uses about 26% leverage. So points and reasoning, it's really was trading at a big discount. It's still trading at a big discount. By the way, this fund, I guess nobody likes it, and it's always trading at a discount. That means that the NAV price, the actual value, is higher than the stock price. And the US equivalent, there is an exact US equivalent on the US stock market, FAX. It's only was, and at that time, it was only trading at a 5% discount as well, whereas the Canadian version, 17% discount. So that's another reason why it was a pick here. So like I said before, unique and niche exposure, diversification, high yield because of leverage. So that's basically the points and reasoning. At that time, there was an NCIB, which is basically a share buyback. So even the fund manager thought that this is trading at a discount and it's worth for them to buy back their own shares. That's basically it. Pick number 3 is ZWU, one of my favorite covered call ETFs that deals with defensive sectors. So this is the utilities one from BMO. Always a nice high yield in the 7s usually. So as we know, utilities ETF, what does that mean? Well, it's going to hold utilities companies, so electricity companies, telecommunication companies, and pipeline companies all over North America. So ZW covers North America. Only at the time of the pick, 1298, yield was 740, so a little bit lower than the 1 year high of 1312. Keep in mind, this is August 2021 when the stock market was doing fairly well and recovered fairly high. So you could see the breakdown here. It's pretty much the same companies now. So you have, Bell, Telus, Rogers, AT&T, Verizon for your telecom. Electricity is the biggest chunk. You have Hydro One, Emera, PPL, Southern Coal, Duke Energy, Exelon, that's in the United States, Northland Power, Canadian Utilities. So mostly electricity companies and telecommunication companies, but you also have some pipeline companies, and it's the ones that you want. Enbridge, Pembina Pipeline, TC Energy, and I believe maybe there's Kinder Morgan on the US side. So very, very defensive here. And that's the key points and reasoning, right? ZW, very defensive. It's utilities, always a good buy in any kind of market, in my opinion. It's an easy way to get the best utilities in North America with only one ETF and high 7+% yield thanks to the covered call strategy. So although this is a defensive and very boring sector, it's actually one of the highest yielding covered call ETFs that BMO has. And keep in mind, these are not leveraged. So that's why it's 7.5%, not higher. There's no leverage with these funds. Even the risk rating that BMO gives it, low to medium, says a lot, right? Utilities, a defensive sector. Also very tax efficient distributions because you're mostly getting capital gains in BROC, not eligible dividends, but you are getting a little bit of eligible dividends as well because there are Canadian companies in here. And this has a strong history. It's one of BMO's oldest covered call ETFs. I believe it started in 2011 along with ZWB. And very, very consistent and high yield. So those were the picks for August 2021. Let's check out the report card together to see how they're doing right now. All right, report card time, guys. And keep in mind, you could download the report card for everything. I'm just going to look at August, but all my previous picks are in the report card as well. On my website under free tools and resources, you could download it there in case the report card is showing up a little bit small for you. So let's go through them one by one here. RYLD, right now it's about 2120. So, like I mentioned before, keep in mind a year ago right now, stock market was very high. And now, between now and then, it did take a dip. So 2120, you're looking at a decrease of 15.44%. But, this is RYLD. The main focus is not the stock price. It's always the distribution. So this, like I wrote there, ETF is behaving as designed. High income with covered call drag. So I was always trying to figure out what's the best way to describe the negative of covered call ETFs, because covered call ETFs, they have high income, they're very defensive, you get less volatility. Those are all the pros, but you have to sacrifice something. And how do I explain the word? And Rob Wessel gave it to me during the last video we did together. He mentioned the term drag. So I find that word drag is a perfect description of what covered call ETFs do over time. Basically, when the market is flat or going down, it's the ETF that you want. But when the market starts recovering very quickly, there's a bit of drag, right? They don't recover as quickly, and covered call ETFs have drag during strong bull markets. So There is a little bit of drag with any covered call ETF. You got to keep that in mind. You're holding this for the income, not stock price appreciation. But I would say it's still a good pick regardless, right? Because although you're down 15%, you probably got about 12% in yield, and you'll keep getting that great yield as well. FAP is down about 20%. The dividend is unchanged, however. So this one is not so great of a stock pick, I guess. I had since sold it. I am, like I said, I'm not perfect. I make mistakes, and I feel like this is still not so bad. It's still trading at a big discount right now. The dividend is still fairly attractive at 8.5% yield, or probably higher right now, I believe. So this pick was specifically really for the discount to NAV. The dividend's unchanged. It was meant for diversification. So yes, if you're counting the yield that you got, which is 8.5%, if you do 19 minus 19.87 minus 8.5, you're basically down 11%, which is not so bad. And if you decide to keep holding it, you'll still get that monthly income. Hopefully it doesn't get reduced. But I since sold this closed-end fund. I'm starting to get away more and more and just completely dislike fixed income, even though it's leveraged. Going forward, I'm not a fan of fixed income anymore. So this is definitely not something I will be re-adding to my portfolio personally. But hey, if you have it and you're down on it, you could go ahead and keep it. You'll still probably get your monthly dividends. And eventually you'll break even with the income, and then you could sell it if you want. So if you have this in a registered account like a TFSA RSP, I suggest to keep it, wait it out. If you have it in a cash account and you want to sell it, you want to get rid of it, you could go ahead in a cash account, because losses carry forward indefinitely. You'll make them up for sure. So I put neutral here, not the greatest pick, but at least the dividend hasn't changed. If it was reduced, then it'll probably be a bad pick. ZWU, completely unchanged pretty much. It's at about a little over 13 right now. So same price, same dividend, no misses. It's just a solid pick. Utilities is very, very defensive. So no surprises here. So pretty decent month here. I'll probably give myself a B- or something like that. So fairly decent stock picks, but keep in mind these are really designed for income. So the most important thing is really the dividend here. It has a lot more weight than the stock price 1 year later. But hey, FAP, what could I say? It's not too great, but at least it's still paying, right? So that's it for this month, guys. We'll see, as usual, next month. Join me here again for the September 2021 stock picks. Thanks for watching, everyone. Really appreciate it. Make sure to hit that like button, that thumbs up button. It helps the channel grow, so it's a win-win. Also, make sure to subscribe if you're not already subscribed, not to miss out on my future content. It's all about income-focused investing. And also, you got to be subscribed if you want to participate in my surveys, where I ask the audience, I ask you what topic you want me to cover next. So very important. Subscribe, hit that little bell button so you are notified of any new videos and any new surveys as well. Make sure to check out our website. We have a website, passiveincomeinvesting.ca. That's where you could purchase my digital product that I'm very proud of, the ultimate DIY investing package, which is on version 3 right now. So this is a reference tool. It's a companion tool to help you build your own custom portfolio. It's good for Canadian investors and American investors. So it covers both the Canadian and American stock markets. It has sample portfolios as well, multiple sample portfolios for different investing styles. So it's a very cool product, and it does come with lifetime updates. So you only have to purchase it once. My intention is to come out with a new version every single year. So you purchase it once, you never have to pay for it ever again. You'll get the lifetime, the updates for free forever. Also, right there on my homepage on the website, I do offer a one-on-one coaching session. If ever you want a little more personalized help, it's a 1-hour Zoom call with yours truly, a one-on-one with me, where you could ask me anything you want. We'll go through your situation and I'll give you my opinion on how best, I'll help you best I can, basically based on my opinions. Just keep in mind that I am not a licensed or registered financial advisor or financial planner. We also have a Facebook group, so join us there. Passive Income Investing, over 11,000 members. We try to get the spams and the scammers out of there as quickly as possible. So it's a very, very clean group. Everyone's asking questions, trying to help each other, and it's a really, really cool and fun community. If you want a little bit more personalized stuff on our day-to-day life, follow us on Instagram as well. We recently moved to Panama, so if you want some more information on more personal stuff, you could follow us on Instagram. My mission, the mission of this channel, will always remain the same, everyone. It's to help everyday, regular, normal, working people to invest on their own, do-it-yourself investing, right, in order to build their own stream of passive income to enhance their quality of life, and when they become financially free, financially independent. Very important goal. So, as usual, I continue to stay safe, everyone. Stay healthy, and of course, stay passive. See you next time.